Hi guys, I welcome you in this wonderful video. So there's something important that I want to address when it comes to a trend. So here we have an uptrend. Let me just indicate it with trend line so I can go draw my trend line all the way up there. Let me increase the thickness. So we have an uptrend going all the way up, and then in the uptrend we can clearly observe the areas of correction and areas of impulsive. In this scenario we have an impulsive wave, just duplicate it, another impulsive wave, and lastly we have another impulsive wave, and then the rest it is just corrective waves. So when you observe such, as a trader, you need to know that when you trade or when you open a trade, you need to know that you need opportunities that are gonna limit your risk, and also that are gonna give you a huge return. So you compare the two, you compare the risk and you also compare the reward. Let me just write RW. You compare the risk and you compare the reward. Obviously you want to make sure that the reward is bigger than the risk. So what you're gonna risk is bigger than the reward, and what's gonna determine this, that the risk should be small and the reward should be big. This is gonna be determined by your entry. It always matter when and where you enter your market. Despite the fact that it is a beautiful uptrend, but it will always matter where you're gonna enter that trend. So something that I wanna address, it is this kind of a scenario where we have such corrective wave. So here we have a corrective wave, and we know that when you observe a corrective wave, it is important to note the pattern or the manner of structure that it is using to correct. For this case, we can see that we have a channel that is descending all the way to the downside. Let me just use a different color like that one, maybe it's better. So we have this descending channel here going down. You can see lows and highs in this channel, meaning as a trader you observe, or you'll have to wait for a breakout. When the breakout happens, then you're gonna buy. And when you buy, and then you're gonna wait for your target. And your target, you need to know as a trader that observing how this trend has been behaving, usually the end point or your target will not be far, because let me just illustrate on the side here. Because when you trade, let's say you have your uptrend like this. When you trade an uptrend, you need to know that your next target, you can have two different targets, but your primary target, you start paying attention whenever, let's say you entered here, whenever the market approaches that previous high. Let me use a different color, beautiful one like that. You will pay attention when the market approaches the previous high. That's where you'll start paying attention for a possible reversal. Same thing applies when you enter here. You'll start paying attention whenever that market approaches that previous high. Same thing when you enter here. You start paying attention whenever that market approaches that previous high. But I want you to pay attention into what's going to happen when you immediately when you identify this as a buy signal. Wait, let me remove that. Sorry about that. So what's going to happen here, because you're going to find the opportunity a little bit late, because even when the breakout happens here, you won't just enter immediately here. You'll have to wait and confirm that indeed this downward resisting trend line is broken, meaning you'll enter somewhere here. Do you know that immediately when you execute your trade, here, you need to know that you are already close to the area which you pay attention into and start monitoring a possible reversal. And even if you can pay attention to how the trend was behaving, you can see that the previous high is a little bit closer to the previous reversal. So there's just a little bit of a difference. So when you as a trader, you enter here close to the previous high, you need to know that you have limited your opportunities of having a bigger reward. Instead, you have increased your opportunities of having a bigger risk, because if you enter here, let's say the market move like this, you'll have to buy here and compromise maybe and have your stop loss somewhere inside the pattern. Or those who say stop loss should be below the previous low, you need to know that it's going to be impossible for you to have a stop loss here, because it's far longer, or it is very above the very below the entry point, not above. I'm sorry about that. So you need to make sure as a trader that when you now have to take your opportunity, let me erase and erase. When you have to take your opportunity as a trader, it is important to always pay attention into how the corrective wave is behaving, how big are the waves inside the corrective wave. Such corrective waves are very, very healthy and good for you to trade, because you're going to enter somewhere here which is a little bit better and which is a little bit earlier, and you can have a stop loss all the way here. Even when you compare it with that area, it's still a good area compared to your entry point to the stop loss and your entry point to the possible area where you're going to start observing for a reversal. Not that you're going to exit here, but you're going to start observing. I hope that one is making sense. So it is important for you as a trader to always pay attention into what pattern does the corrective wave give you. So one can ask that, okay, we said that we shouldn't enter after a breakout of this area here. What should you do for you to get a good opportunity? So what you should observe as a trader, it is to observe these areas only. It is to observe these areas only, the lows. I want you to, for a little bit, forget about the highs. The lows, that's what you should pay attention into, because that's where the first signal is gonna come from. Although it might come from the high in some cases, but usually the first signal comes from the low, because when it goes up here, it can start going up, and it will still indicate that, okay, buyers can come in. But if it comes down and then breaks a little bit higher than the previous one, that's now a main confirmation that you need to know that indeed the buyers, they are coming in. So you have to pay attention into the lows on how they are being formed. How are the lows being formed, and how are the waves being formed? Because here, for you to get a possible earlier entry, you have to make sure that the sellers, they become weaker and the buyers, they become stronger. So the sellers become weak by having waves which become smaller and smaller. So in the corrective wave, let me just have an illustration here. In the corrective wave, let's say it starts very, very clear like this, as we have observed in that one above, and then you start observing something like a bigger wave, and then a smaller wave to the sellers, and then another wave coming in. So this is now a main confirmation. Even if a breakout doesn't happen, let's say this doesn't get broken, let's say it reverses here and start going down again, and then give you a next high, you need to know that because now you have two lows, you have two lows which are now confirming that the sellers are struggling to push the market all the way down. That's a good confirmation for you to take that advantage earlier, instead of you waiting for a breakout to happen all the way up there. You can get your entry earlier by observing the lows, and you have an advantage because this is an uptrend. So when you take an opportunity towards the buyer side, it's better than taking an opportunity towards the sellers, because the main strength is on the buyer side. So I hope this is making sense. That's what I wanted to point out, guys. Thank you for watching this video. Remember to like, share, and subscribe.